Hello ladies and gentlemen, it's your truly Ian Pius, and today I'm back again guys with another video where I always come each and every week, give you guys the insight of the pairs that I'm trading, how far they've gone and what is going on with them, and also give you guys the results of the trades that I've been taking. So guys, there is some pairs that I took last week and I want to show you guys the results and how far they've run. And most importantly, I want also to show you guys the pairs that I'm going to be focusing on in the next coming few weeks, guys. So if you always find any kind of value into this kind of content that I do each and every week, I urge you guys to go down there and tap onto the subscribe button, guys. So that whenever I'll be releasing any video, you'll be among the first people to come and watch this video, guys. So for now, thank you, and let's just roll into the video, guys. So guys, last week I traded some I show you guys some gold pairs. I show you guys gold. I show you guys how I will be able to take gold and S&P 500. So let me first start by giving the result for S&P 500. How it went. S&P 500, guys. To be honest with you guys, I lost that trade. And right now the market has changed its direction. Remember guys, I show you guys this trade from a 4-hour time frame. It was from somewhere here, and I took this trade from with this with this bearish engulfing 4-hour candlestick. My This bearish engulfing candlestick, and my stop loss was above the structure somewhere here, and my first TP was here, guys. My first TP was here. This how my first trade, this how my trade for S&P was, but the market stopped me out, and it's fine, guys, because it's better for the market to stop you out. Stopping you out of trade doesn't mean you've already failed. It's not like that. You have not failed trading. Loss, it's part of the game. There's no way you'll be making profit and you're not going to be losing at all. The only thing that can help you to stick and stay long into the game is for you to always be able to stop the loss and also be able to protect your capital. So what I did here, I just been risking only 1% of my trade. I was only risking 1% of my trade, and here I only lost 1%, okay, which is okay. So next time I can still make it back, but right now with S&P, we already changed the direction into the bullish trend, guys. We are already back into the bullish trend, and right now I'm not so certain for the direction, and I'll only be able to come back and give you guys more insight of S&P when it breaks above the zone here. When it break above this green line here, then when I will be able to come back. But also, if you want to take this trade, simply you can just wait it for it to come back here, retest it, retest this trend line, and then when it's now pulling back with a bullish engulfing candlestick in a daily time frame, that's when you can come and then take this trade. But for now, I'm not so much interested in S&P 500 until it breaks above here, breaks above this green line. So this is just for the S&P 500. And also last week, you remember last week, I'm still holding this trade for GBPCHF. I'm still holding this trade right here, and this trade is still at my entry, guys. It's still at my entry. So I'm just still patient waiting. The trade have not yet taken me out. I'm still holding this trade. Remember last time our counter trend line was here. Our counter trend line was, yeah, last week our counter trend line was like this. So the market has broken it already and retested it. And now the market has created another counter trend line like this, which also the market has already broken it and is still trying to retest it. So I am still holding this trade firmly, only unless I'll be out of this trade, only unless when the market come and stop me out I always like sticking with my risk management, guys. I don't just come and get in and get out and I'll let the market do its thing. Always give the room for the market to do whatever it wants to. Just stick to your risk management. So I'm sticking to my risk management, risking 1% per trade and let it just do whatever it wants to. If it goes to my direction, is okay. If it goes against me, it's also okay. So this is just for the GBPCHF. I'm still holding it and I'll see how it goes in the next coming few days to come. And also last week I talked to you guys about gold, guys. I talked to you guys about gold, which right now is already running. Remember, guys, last week I told you guys the only way I'll be able to enter in gold trade when the market break this counter trend line and retest it, and the market did that exactly in a 4 hour. If we were to drop, the market did that exactly in 4 hour time frame. See, the market came, this is the first pullback. I didn't enter, reason being the market had not yet reached into the demand zone. So when the market came to the second one, that's when I was now having that kind of interest to enter the trade, but I never entered then. Exactly, the market pushed out of the zone. I didn't enter, and then the market gave me another bullish engulfing of 4 hours. That's when I came on triggered in the trade. So right now this trade it's in running. This trade is running right now, which and my first TP it is here. Where last time I told you guys my first TP is somewhere here, which is around risk 1:4, guys. It's yeah, it's 1:4. And then my second TP it's here. Then after when the market reaches here, I would take most of my profit out and then let the rest to run, guys. But if you didn't get an opportunity to enter this trade, guys, still there's still more room to enter this trade. The only thing you can wait for is for the market to break again above here. Is to wait for the market to break above here, then you can come and trigger in the trade. If you haven't entered the trade, you can just wait for the market to break again above here like this and come and retest it. When now it's pulling out of the zone, that's when you can come and trigger only with the bullish engulfing candlestick in a 4 hour time frame. That's when you can come and jump into this trade, guys. So this is what is happening, because from here it created a pattern of a W pattern in a 4 hour, which shows that this is a a reversal to the upside. So it has to break above and then come and retest the neckline. That when you can come and trigger in the trade. So this is just for the goal. And so I want to give you some two pairs that I'm focusing on. I'll be focusing on in the next coming few weeks to come. Remember, guys, last time I talked to you guys about Chef JPY. That when them, I told you guys that when Chef JPY comes around here, I'll be able to trigger this trade. Before it was like this, guys. Let me give you. Before this upper trend wasn't there, so in a weekly time frame it was showing a kind of a pattern to the downside, but then right now this pattern has already been interrupted. Reason being the markers has broken the 50 pip of where the market should have been pulling back from. So right now I'm not seeing any kind of a bearish trend anymore. I'm not seeing any kind of a reversal of a bearish anymore. I'm still seeing more continuation of a bullish trend, guys. So what I'm seeing right now is a continuation of a bullish trend of Chef JPY. Reason being, right now the markets, if this market could have continued to the downside, it would have come in around the 50 pip, retested it, and then just continue flowing down, and then, but it didn't do it like that exactly. Reason it didn't do it like that exactly. So the only thing I'm waiting for, as you could see, also in a weekly time frame, the market has already made for us a pattern, a W pattern form, and whereby you guys always know as a string trader, any pattern make in a higher time frame, most like in a weekly and a monthly, this pattern tends to be very, very strong. So this pattern, it looks very strong, and with any type of doubt, I'm pretty sure this market is still going to continue going to the upside. But right now, I'm not triggering any trade into this trade. I'm not triggering anything only unless the market breaks above the neckline. As you could see in a weekly time frame, the market shows a pattern, a W pattern, also in a daily time frame. It's showing the same thing, a W pattern form. So my next level for CHFJPY, if this break above here, my next level is gonna be here. How was I able to get this level here? It's pretty much simple. Technically, always the amount of pips it takes for the market to consolidate, it would be the same amount of pips. The moment the market broke above that structure, it would take the same amount of pips, guys. So I measure it, and then it came and yeah, stop here. So that's mean if the market breaks above here, this will be my next level for the target of this trade, guys. So for now, I'm just now patiently waiting for my confirmation, whereby in a daily has to first break first with a bullish engulfing in a daily candlestick and then pulls back. That's when I'll be having that kind of an interest to come and trigger in with the counter trend line, and then the market breaks it. That's when I'll trigger in the trade, guys. So for now, this is one of the trade that I'm waiting for to trigger in, because it's look quite perfect. 70 out of 100, I'm pretty sure for this trade to continue going upward only if the market breaks above here. Anything can happen into this trade, guys. So trading just a probability game. We don't know anything what's gonna happen, but it's a probability game. Anything can happen. The market can just easily start flowing back to the downside. So we can only be pretty sure when the market breaks above and then pulls back to give us a confirmation. So this is just for the Chef JPY. Last but not least, I also have a pair here, Euro, I mean Euro card. Euro card has been kind of devastating, has been just up and down, but right now Euro card, it's giving us some good trend, which is a bullish trend. It's looking pretty much good, guys. Euro card is looking pretty much good, as you could see. The market just making further a higher low, higher highs, higher low, higher highs. The market come and make for us the same low here. So right now the market is going to make for us another higher highs somewhere here, guys. So for now, what I'm gonna do, as you could see, the market came and just tap onto this trend line and continue with its upward direction, and this is a weekly time frame. So if I'm to come into a daily time frame, the only thing I'm only gonna be waiting for, it's a pullback, guys. A pullback, a pullback to this zone somewhere here. I need a pullback somewhere here to here. So the only thing I'm only gonna be waiting for, if the market pulls back here, the market has to give me a confirmation with a bullish engulfing 4 hour time frame. That's when I can only be able to trigger this trade. Reason, because the market can just easily come and then tap onto this zone. We have in two demand zone, this one and this one. If I'm to show into a weekly time frame, it's look, and this one look pretty much stronger than the first one, you see. And also this one, it's a Fibonacci fib. If I'm draw for you guys, you see this one is a Fibonacci fib, so this one looks much more stronger than this one. So I think the one I'll be focusing most is gonna be this one. The market has to first break, pull back to somewhere here, and then I will be able to come back and then let you guys know of what is happening with EuroCAD. Yeah, so that's just what is happening with EuroCAD, and These are just the four pairs that right now I'm focusing on. These are just the four pairs that I am focusing on for now. So I want to wait a euro card to pull back to 50 then I'll be able to trigger this trade from somewhere here and then let it continue moving to the upside. My first TP is gonna be here, guys. This is gonna be my first TP somewhere here. This is my first TP. This is gonna be my first TP. And then when the market breaks above here, technically we need to come and make another higher high somewhere around here. If I'm to look left, if I am to look left, this is where the market came and stopped. So which means if the market breaks above this zone, the market has to come and make another high high somewhere. Yeah. So this is just for now for the euro card. So right now, guys, we have come to the end of this. We have come to the end of this video, and if you find any kind of value of the kind of pairs I'm giving you guys, and if you are also triggering taking trades with these pairs that I'm showing you guys, tag me in and then let me know how your trade is also running as well. And also, guys, if you want me to analyze any pairs, also tag me in the comment section. Then next time I'll be able to come back and then analyze for you the kind of pairs you want me to analyze. So, guys, these are just the pairs that I'm focusing on: the CHFJPY, EURCAD, Gold, and then GBPCHF. These are just the four pairs that I'm focusing on, and doesn't mean these pairs I'm taking them all. No, I take these pairs just one or two of them. The one which give me one of the most clear confirmation. I'm just giving you guys this one so you can just go and choose for your own. Doesn't mean you should take them all. No, just take the one you know it's showing you a very clear confirmation. Then just go with it. So thank you, and we have come to the end, guys. Thank you, and just peace out. And please just use a proper risk management. So thank you, and have a nice week.